My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you some money. My job, not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Gulp. That's the feeling that went through my gut today when I read a speech by Fed Governor and Vice Chair nominee Lael Brainard, one of the most reliable doves on the Fed, who's been transformed out of nowhere, not just into a hawk, but a velociraptor. Today, we felt her talons, Dow plunging 281 points, S&P plummeting 1.26%, NASDAQ nosediving 2.26%, and it was all on her. There was no other negative news about the markets, but there didn't need to be. Yes, she's that important. It was a dramatic departure from just yesterday when we felt the economy would accelerate and all was good. Suddenly, everything you liked has become hated, creating a dangerously bipolar situation where I can only recommend lithium and some CNBC Investing Club counseling, as we put out multiple bulletins today about the need to be more conservative here because of this big change in facts. Now, normally I'm not that attentive to statements from individual Federal Reserve members. Others are. I prefer to focus on the merits of individual companies. Actually, I hate trading off every comment from our central bankers. But when I hear certain words from key members like Brainard, words that indicate she's pivoting hard to a view that's much more negative for the stock market, well, you know what you have to do? You have to pull in those horns. See, Brainard is widely considered the biggest protector of the working class on the Fed. She was Elizabeth Warren's pick to lead the Fed and got the nod for vice chair when President Biden decided to stick with Jay Powell. What matters here is that historically, Brainard is a dove, which, of course, is good for the bulls. Because she wants to help the downtrodden, she's been a relentless advocate of pro-employment policies that also happen to be pro-inflation. That is, until today. Suddenly, she's got the most anti-inflationary position in the entire Fed. So we're going to go through some of these words, this verbiage, because it's that important. Listen to this. Today's inflation is very high, particularly for food and gasoline. All Americans are confronting higher prices, but the burden is particularly great for households with more limited resources, end quote. Now, previously, Brainard was adamant that inflation was transitory. We get over it. Oh, speech after speech after speech as we emerge from the pandemic. Transitory, transitory. Now she says it's getting worse, not better. So, quote, getting inflation down is our most important task, while sustaining recovery that includes everyone. This is vital to sustaining the purchasing power of American families, end quote. In other words, the Fed has done its job well in terms of getting people's more jobs, but it's failed abysmally at keeping inflation in check, the other part of its dual mandate. Like Powell, Brainard held out hopes that everything would calm down on its own, whether it be cars or homes or food, but nothing panned out on any front. Thanks to inflation, the real burdens on the poor have grown and grown. So now Brainard seems, to feel, I guess, some remorse that's turning her into an anti-inflation zealot. As she said in today's speech, quote, it is of paramount, that's a tough word, paramount importance to get inflation down. Accordingly, the committee will continue tightening monetary policy methodically through a series of rate increases and by starting to reduce the balance sheet at a rapid pace as soon as our May meeting. Emphasis on me. Brainard has been the conscience of the committee, determined to raise inflation to help people who work for a living. And she's giving many a speech concerned about the pace of the recovery for America's considerable underclass. Ever since she became vice chair, that was her mantra. Not anymore. Now she says, quote, given that the recovery has been considerably stronger and faster than the previous cycle, I expect the balance sheet to shrink considerably more rapidly than in the previous recovery, end quote. In fact, she's now talking about tightening, quote, over and above, end quote, what's expected. All right, here's the coup de grace, where those velociraptor talons come out. Quote, currently inflation is much too high and subject to upside risk. The committee is prepared to take strong action if indicators of inflation and inflation expectations indicate that such action is warranted, end quote. All right, now, if I were to translate this into plain English, spoken by just you and me, well, here's what it would be. It would be like, look out below. the biggest backer of low interest rates, now wants much higher rates and wants the Fed's bond holdings, trillions of dollars, to be sold aggressively. The market can't handle that. That would give us instantly higher long-term interest rates. In other words, it's going to spike mortgage rates at the exact moment when it looks like consumers have already started pulling in their spending horns. Mortgage rates are about 5% right now. I bet that price is going to look like a steal in a couple of months because of this. If you put Brainard's comments together with what we recently heard from Gary Friedman, the CEO of RH, for the former Restoration Harbor, you might want to think about trimming something from all of your holdings. And that's what we've been doing for my charitable trust. I don't want to be two-faced. It's quite frustrating when you hear a good story and it goes down anyway, but that's what happens when you know the Federal Reserve is on a mission to chill the economy. Good stories go down. Yes, chill it, maybe freeze it. Why be so attentive to this one Fed official? Because I chose to ignore comments made by a person by the name of Esther George, another Fed head, in early October of 2018. That was a mistake. George's comments predicated Jay Powell's later statement that we needed lockstep rate hikes. Ultimately, we didn't get them. But for a few months, trillions of dollars were lost in the industrials and tech stocks. The month of October of 2018 was the worst month in years and years and years. And it really fell on the semiconductors, and it fell on tech in general. Okay, this time is different. Brainard's not a hog. She's a dove who's recognized we've got the kind of persistent inflation that's most damaging for regular people. She's right. Exactly the people she took this job to help, their wages aren't going up as fast as inflation. I won't allow myself to be oblivious to this wake-up call the second time. Again, as I told members of the Investing Club, I'm pulling in my horns and selling with alacrity. Listen, a year ago, Brainard thought inflation was transitory and headed lower. Problem now is that we're beginning to see some real cracks in the economy. Mortgage applications going down and down and down, which could be deadly for the economy if this pace continues. Auto sales coming in much weaker than expected. Holy cow. Baltic freight rates, a great indicator of industrial demand, going down day after day. Meanwhile, there's a sense that European business is way off kilter, precisely when China seems to be undergoing something close to a national COVID lockdown because their government refuses to use our superior vaccines. Now, I want people to mind my words. This is not a sell everything call. I've been through that. I've been through 40 years. I'm not saying that at all. In fact, the healthcare stocks and the oils are still very attractive here. I would put more money in them if they come down. Oil because of supply issues, drugs because they're pretty much immune to the Fed-mandated recession. I'm simply saying that I'm getting more conservative. I don't like it when you have a market where on Monday traders buy all the semis and dump the healthcares, and then on Tuesday they buy all the healthcares and dump the semis. That is a classic sign that no one knows what to do. It's the kind of thing that usually happens right before the same traders say, I give up. I'm going to sell everything. I don't want you to get caught in that maelstrom. Bottom line, if you own anything you don't like, this is as good as time as any to sell it. We're up a lot. I think we were going to get good prices in retrospect. When the Fed's biggest dove turns into a bird of prey, you better take notice of it because she will take your head off. Austin in Kentucky. Austin.
Thanks so much for taking my call. Love the show.
Oh, you're quite welcome.
My question is about Progressive. Scientists, expect due to climate change, insurers to have a lot of losses due to disasters. We did see that large loss back in 2021. With increasing costs for replacement, I do see premiums going up, so underwriting profit should be increasing third quarter. With it off its 117 highs, would this be a good time to buy?
To buy which one?
Progressive.
You know what? Yeah. I mean, you told us, but our viewers are so smart. Austin, you told the story exactly as it is. That's precisely why you have to do it. Remember that they do own a lot of treasuries, and that can hurt them. But, yes, rates are going through the moon. All right, now listen to me. If you own anything you don't like, you want to do some trimming, join the club. Okay, just listen to the club. We got a big call on Thursday. I'll tell you exactly how we're approaching it with real money, which is what you want to know. But let me tell you, it ain't foolishly. On Mad Money tonight, natural gas prices soared again today. So what stocks are the best way to play it? I'm going to give you three that I have my eye on, and they will work in this environment. And then speaking of working in the environment, rents are skyrocketing across the country. I'm screening apartment REITs that might be worth watching in this environment. And Uber Freight has become king of the trucking industry in an increasingly digital world. And I'm getting a read on the space with the head of the division and some of the rates that are going down that are head spin. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.